Hi students, the today's topic is relating to PUC-II, CBSE, ISC, Class 12, Accountancy, Accounting Ratios. One time check is my voice audible to everybody? Let us start. First question is, what is ratio? Ratio, what is ratio? Ratio is a mathematical number. The first point is that in the ratio, it is a mathematical number. Calculated means how it is calculated? As a reference to relationship of two or more numbers. Means we are taking the two or more numbers and we are making one relationship. And it can be expressed as, how can we express it? As a fraction, like 1 by 2, 2 by 2/3, 1/3, 4, like that. Proportion, like 2:1. Percentage, like 10%, 20%, 30%. And number of times, like 2 times, 3 times, 4 times, like that. So that's why ratio is a mathematical number calculated as a reference to relationship of two or more numbers and can be expressed as a fraction, proportion, percentage and number of times. Now you come to know the example. Let us start with an example. See here. For example, one minute, I want to adjust it. See it. For example, current assets rupees 2 lakh and current liabilities are rupees 1 lakh. Calculate current ratio. It is an example. Current ratio is equal to, what is the formula? Current asset divided by current liability. Just I am giving example. Later on, in the next part, in the practical part, we will solve the questions. Just in order to give the example or idea about the proportion, number, time, fraction, that's why I am giving this example. The first example, current assets rupees 2 lakh, current liability rupees 1 lakh. Calculate current ratio. Answer, current ratio is equals to current asset divided by current liabilities. Current ratio is equal to rupees 2 lakh divided by 1 lakh. Current ratio is equal to 2 times of current liabilities. So what is the interpretation? Our current assets are 2 times of the current liabilities. See here, current liability is 1 lakh. Its 2 times means 2 lakh. So current assets are 2 lakh. Now in this case, ratio is expressed in number of times. Next, or we can express in this way also, like or. Current ratio is equal to current asset ratio current liability. Current ratio is equal to 2:1. Like 2 lakh ratio 1 lakh. 2:1. It is in proportion. That one in number of times. Next, your ratio can be expressed as a percentage. Take another example. Gross profit is rupees 50,000 and revenue from operation is rupees 1 lakh. Calculate gross profit ratio. Calculate gross profit ratio. Gross profit ratio is equal to gross profit divided by net revenue from operations. Net revenue from operations into 100, When we are multiplying it by 100, the answer will be in percentage. Gross profit ratio is equals to rupees 50,000 divided by rupees 1 lakh into 100. The gross profit ratio is equals to 50% of revenue from operation. What is the interpretation? What is the meaning of it? Our gross profit is 50% of our revenue from operation. You may take the calculator. Rupees 1 lakh is the revenue from operation. Its 50% means rupees 50,000. So gross profit is expressed in percentage. As we told, ratio can be expressed in number of times, proportion, ratio, or in fraction also. Next, test your understanding. First question. Ratio is always expressed as quotient of one number divided by another. Ratio is always expressed as quotient of one number divided by another. Answer is false, because ratio can be expressed as a percentage, proportion, number of time, or in fraction. Second question, B. Ratio helps in comparison of the firm's result over a number of accounting periods as well as with the other business enterprise. True. We can calculate the ratio for one particular period, or we can calculate the ratios for the more than one accounting period, or we can compare our ratios with another company ratios. Suppose our GP ratio is 10%, our competitor ratio may be 10% or more or less. So that's why answer is true. Next question. B, C. A ratio reflects, means shows. A ratio reflects quantitative and qualitative aspects of results. False, because ratio reflects only quantitative aspects, not qualitative. Next, D, question number D. A dash is a mathematical number calculated as reference to relationship of two or more numbers. Answer is ratio. As I told you, ratio is a mathematical number calculated as a reference to relationship of two or more numbers. So that's why answer is ratio. Question number E. Dash can be expressed. We can express it as a fraction, proportion, percentage, and number of times. Answer is ratio. Question F. Ratios are means to an end rather than the dash dash. Answer is end itself. Means ratios are means to an end rather than the end itself. Question number G. Ratio reflects quantitative and qualitative aspect of the results. It is repeated. Question repeated. Answer is false. Ratio is always expressed as a quotient of one number divided by another. Ratio is always expressed as a quotient of one number divided by another. Next, what is analysis? Analysis means simplification, means making it very simple. Analysis means simplification of financial data. Some are pronounced data. Analysis means simplification of financial data. First term is simplification. How? By methodical classification given in the financial statements. These financial data are given in where? These are given in financial statements. That's why analysis means simplification of financial statement data by methodical classification given in the financial statements. So analysis means simplification of financial data. What is interpretation? Interpretation means explaining the meaning and significance of the data. What is interpretation? Explaining the meaning and significance of the data. What is analysis? Analysis means simplification of financial data. Interpretation means explaining the meaning and significance of the data, financial data or any other data. Okay. Next, test your understanding. Fill in the blanks with appropriate words. Analysis means dash dash data. Analysis means simplification of financial data. Interpretation means dash data. Interpretation means explaining the meaning and significance of the data. So that's why analysis is simplification of financial data. Interpretation means explaining the meaning and significance of the data. What is accounting ratio? What is accounting ratio? It is not a what is ratio. What is accounting ratio? When number is calculated, when the number is calculated, one number you have calculated. How? By referring to two accounting numbers. By referring to two accounting numbers. You should take the two accounting numbers derived from the financial statements. From where you are getting these two data numbers? From the financial statement. It is termed as accounting ratio. So it means that you are taking the two data from the financial statement and you are calculating one number. That ratio is called accounting ratio. When a number is calculated by referring to two accounting numbers derived from the financial statements, it is termed as accounting ratio. In simple term, you are taking the two data. From where you are getting it? From the financial statement. Then you are calculating one ratio. That ratio is called accounting ratio. Test your understanding. Accounting ratios are an important tools of financial analysis. If you want to make a financial analysis, what is required? Accounting ratios are required. So accounting ratios are an important tools of financial analysis. Next, what is statement of profit and loss ratio? What is statement of profit and loss ratio? In order to calculate the ratio, we want one is numerator, another one is denominator. It means two variables are required. If ratio is computed, means calculated with both the variables, both means two variables, from the statement of profit and loss, both numerator as well as denominator are taken from the statement of profit and loss, is known as statement of profit and loss ratio. It means that one ratio is calculated by taking the two variables from the statement of profit and loss. That ratio is called statement of profit and loss ratio. Example. For example, gross profit is 50,000. Gross profit is also available in the statement of profit and loss. And revenue from operation is rupees 1 lakh. So revenue from operation is also available in the statement of profit and loss. Now which are the two variables? One is gross profit, another variable is revenue from operations. These two variables are both the variables are taken from the statement of profit and loss. Now we are calculating one ratio. Which ratio? Gross profit ratio. So gross profit ratio is equal to gross profit divided by net revenue from operation into 100. Gross profit ratio is equal to 50,000 divided by 1 lakh into 100. Gross profit ratio is equal to 50% of revenue from operation. Okay. So now we have calculated one number, that is ratio. What is that number? 50%. When this ratio is calculated by taking both the variables from the statement of profit and loss, it is called statement of profit and loss ratio. Next, What is balance sheet ratio? If ratio is computed, means if ratio is calculated with both the variables, two variables or both the variables from the balance sheet, these variables are taken from the balance sheet, is known as balance sheet ratio. It means that you are taking the two variables from the balance sheet itself, then you are calculating one ratio. That ratio is called balance sheet ratio. For example, current assets rupees 2 lakh, current liabilities rupees 1 lakh. Calculate the current ratio. Current ratio is equals to current asset divided by current liabilities. Two variables. One is current asset, another is current liabilities. These are two variables. Current asset also available in the balance sheet. Current liabilities also available in the balance sheet. It means that now you got that both the variables from the balance sheet. So current ratio is equals to 2 lakh divided by 1 lakh. Current ratio is equal to 2 times of current liabilities. Or current ratio is equal to current asset ratio current liabilities. Current ratio is 2:1. I think everybody understanding it. Next, what is composite ratio? Composite means mix. If ratio is computed means calculated with one variable from the statement of profit and loss and another variable from the balance sheet, it is called composite ratio. It is also called comparative ratio. So you are taking two variables are required. One is for the numerator, another is for the denominator. You are taking the two variables from the two statements. One is from the statement of profit and loss, another one is from the balance sheet. So when two variables are taken from the two financial statements and you are calculating one ratio, that ratio is called composite ratio or comparative ratio. For example, net credit revenue from operations rupees 3,20,000. Revenue from net credit sales, revenue from operation is rupees 3,20,000 and average trade receivables are rupees 80,000. Average trade receivables or account receivables. Okay. Calculate trade receivable turnover ratio. Now see here. Net credit revenue from operation is a one variable. It is taken from the statement of profit and loss. And trade receivables are taken from the balance sheet. Then we calculated average. These two variables are taken from the two financial statement. One is net credit revenue from operation is taken from the statement of profit and loss. Account receivables are taken from the balance sheet. Now we are calculating one ratio. This ratio is composite ratio. Therefore, trade receivable turnover ratio or debtor turnover ratio, account receivable turnover ratio is equal to net credit revenue from operations divided by average trade receivables. So trade receivable turnover ratio is equal to rupees 3,20,000 divided by rupees 80,000. Trade receivable turnover ratio is equal to 4 times of current liabilities, or trade receivable turnover ratio is equal to current assets ratio current liabilities. 3,20,000 ratio 80,000. Answer is trade receivable turnover ratio is equal to 4:1. What is financial statement analysis? As I already told you, analysis means simplification of financial data. Simplification of financial data. Now, what is financial statement analysis? It is not analysis. What is financial statement analysis? The process means series. Step 1, step 2, step 3 like that. A process of critical evaluation with finding the logic, finding the reason. So that is critical. The process of critical evaluation, examination, the process of critical evaluation of the financial information contained in the financial statement. See, financial information will be available in the financial statements or not. One is in the statement of profit and loss, another may be in the balance sheet. The process of critical evaluation of financial information contained in the financial statement. For what purpose? In order to understand and make decisions regarding the operation of the firm, regarding the running of the firm, regarding the result of the firm, regarding the operation of the firm, is called financial statement analysis. In this term, it is what is it? It is a process of critical evaluation of financial information. Then where this information is available? Contained in the financial statement. Why? In order to understand and make the decisions. About what? Regarding the operation of the firm is called financial statement analysis. So that's why answer is, what is financial statement analysis? The process of critical evaluation of financial information contained in the financial statements in order to understand and make the decisions regarding the operation of the firm is called financial statement analysis. What is financial analysis? That is financial statement analysis. See, there are the terms. What is analysis? What is financial analysis? What is financial statement analysis? It is what is financial analysis. Financial analysis is the process of identifying the financial strengths and weakness of the firm. Financial strengths and weakness of the firm. It is financial analysis is the process of identifying the financial strength and weakness of the firm. What are the strength of the firm? What are the weakness of the firm? How? By properly establishing relationship between the various items of the balance sheet and statement of profit and loss. We are finding the strength and weakness of the firm by properly establishing the relationship between the various items of the balance sheet and statement of profit and loss. Means we are taking the different variables from the statement of profit and loss and from the balance sheet, and thereby we are establishing one relationship. So it is financial analysis. Test your understanding. State whether each of the following is true or false. Financial analysis is used only by the creditors. It is false, because financial analysis is used by the owner, employees, government, supplier. So they are saying that only, that's only because of the word used only. Answer is false. B. Financial analysis helps an analyst to arrive at a decision. Means financial state analysis help the analyst to take the decision. True. Analysis of data, where this data is provided in the financial statement, means you are analyzing the data given in the financial statement, is termed as financial analysis. Answer is true. Analysis of data provided in the financial statement is termed as financial analysis. Question number 10. What does financial analysis includes? The term financial analysis includes both analysis and interpretation. I told you analysis means simplification of financial data. Interpretation means explaining the meaning and significance of the data or data. What is ratio analysis? What is ratio analysis? What is ratio is different. What is analysis is different. What is ratio analysis? Ratio analysis is a technique which involves regrouping of the data, by application of arithmetical relationships. Means we are, whatever the data available, we are regrouping it. How? By the arithmetical relationship, mathematical relationship. Ratio analysis is a technique which involves regrouping of data by application of arithmetical relationship, or you can take like this also. Ratio analysis is a technique describe the significant relationship, important, intensity, significant relationship which exists, that relation exists between various items of the balance sheet like current asset, fixed asset, current liability, like that, and statement of profit and loss of a firm. You can use any one. Test your understanding. State whether each of the following is true or false. Ratio analysis establish the relationship between the two financial statements. Establish the relationship between two financial statements. One is statement of profit and loss, another one is balance sheet, and is connecting the relationship between the statements. Answer is true. Ratio analysis is a tool, one instrument for analyzing the financial statement of any enterprise. Answer is true. It is one instrument. It is a tool. Question number 12. State the two objectives of ratio analysis. What are the main purpose? Objective of ratio analysis, number 1, to know the area of the business which need more attention. Suppose in any area it is weakness is there, we have to give more attention in that area. Second, to know about the potential areas which can be improved. One potentiality is there, how can we improve it? To know about the financial areas which can be improved with effort in the desired direction. And third one is to provide the deeper analysis of the profitability, whether it is profitable or no, whether profitable or not, if it is profitable, more profitable or less profitable, liquidity, solvency and efficiency level in the business. State two uses or advantage of ratio analysis. Uses or advantage of ratio analysis. Number 1, the ratio analysis helps to understand the efficiency of the decisions. Efficacy of decisions. Whether it helps to understand that whenever you have taken the decision, whether that decision is correct or wrong. Second, simplify the complex figures and establish the relationship. As I told you, in this ratio analysis, two terms are there. One is analysis. Analysis means simplification of financial data. That's why simplification of the complex figures and establish relationships. Number 3. Okay, make it as a 3. Help in comparative analysis. Like we can compare our ratios with other company ratios, our last year ratios with this year. So it helps in comparative analysis. Question number 14. Mention any two limitations of ratio analysis. Answer. The limitation of ratio analysis. Number 1. Limitation of accounting data. Accounting data is limited only. It is not unlimited data. Second, ratio analysis ignore the price level changes. Whatever the data available in the balance sheet or statement of profit and we are taking it. We are not establishing the price level changes and then we are not calculating the ratios. It ignores the price level changes. Third one is ignore the qualitative and non-monetary aspects. So ratio analysis can be made only by using the quantitative data aspects, not qualitative aspects. Test your understanding. State which of the following statement true or false. The word used is only purpose of the financial reporting is to keep the managers informed about the progress of the operations. False. Only not of the progress, strength and weaknesses. Analysis of the data. Analysis of data provided in the financial statement is termed as financial analysis. Answer is true. See, long-term borrowings are concerned about the ability of the firm to discharge its obligation to pay interest and repay the principal amount. Answer is true, because in the long term we are taking the long term loan, we are paying the installment as well as we are paying the principal as well as interest. D. Ratio is always expressed as a quotient of one number divided by another. Answer is false. Is not, it is numerator and denominator, not quotient. E. The ratios helps in comparison of the firm's result over a number of accounting periods as well as with the other business enterprise. We can compare our last year ratio with this year ratio, or we can compare our ratio with another firm or another business ratios. F. Ratio reflects, means shows, quantitative and qualitative aspect of results. Answer is false, because ratio considers only quantitative aspects. Okay. Dear students, this is completely for English. Next one video is in Kannada as well as in English. If you are understanding it, if you are feeling it useful to you, please like it, subscribe it and share it to your friends. In the next part, different types of ratios and their theory as well as formula we will discuss it. Thank you.